Helima, we've seen the price come down for a long time. You know, that sign at every gas station was a sign of inflation for Americans. But here we have a situation where the numbers come down in a good way, but basically it seems like it's fed through the rest of the economy, and we're continuing to see persistent inflation. What's really happening?
I mean, in terms of oil prices, I mean, you absolutely have had this, as you've noted, this consistent decline in U.S. gasoline prices. Fears about recession have weighed on oil prices. I think as we go into the remaining months of the year, the key questions are going to be, what happens with the supply picture? The U.S. has been putting a lot of oil on the market with the SPR that's set to wind down. We have this decision coming in December, with the EU sanctions set to take effect, the price cap plan potentially launching, and that's going to determine whether we have, Russian barrels continuing to flow to key markets in Asia, or whether we have a potential multi-million barrel disruption. And so there are a lot of moving parts in this oil market, but right now we're kind of in this sort of stable zone where, one day we're down a bit because of recession concerns, next day we're up a bit because demand seems to be holding up.
Can we just relitigate, though, the past couple months in the following way, which is to say, you look at prices, and I'm looking at food prices, for example, and the question I'm trying to grapple with, I think we're all trying to understand, is how much of that increase was a function of the higher oil prices prior? And if they aren't, then what is really moving? Is that then a wage story? Is that something else? Where do you see the energy piece of this, to the degree you see it at all, in the numbers we saw yesterday?
I mean, when you think about food prices, we had several factors that were leading to the run-up in food prices. Remember, Ukraine is a major grain producer. Russia's a major grain producer. We had real concerns about a global food crisis because Russia was holding Ukraine's grain hostage. Now, there have been some releases of grain. The Russians have threatened to disrupt it again. But when you want to talk about energy, natural gas is a very important component of fertilizer. So that is a clear feed-through when we want to think about one of the reasons why we've had higher food prices. This fertilizer issue is really key, and that's going to be persistent. The natural gas story remains very, very frightening. And so one of the real impacts we're going to continue to watch is what happens to food prices. We're having issues with fertilizer plants having to curtail, output. Right. So that is going to remain a big concern.
And then finally, if Jay Powell continues to raise interest rates, which I think he will, and whether it's 75 basis points or 100 basis points or something else, that has obviously, even that expectation has pushed down oil prices. Right. How much farther can they be pushed down if, in fact, some of the worst-case scenarios you talk about in Europe and Russia don't happen?
I mean, look, this is certainly weighing on the market. There is a fear of demand destruction. Where we're seeing real problems in demand, though, is a place like China and their lockdown policies. The question is going to be, as we head into, again, the remaining months, it's very, very policy-driven. Does China potentially lift lockdowns? What happens with Russia in terms of output?